Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live, and a strong start to the week by the markets. The Nifty up about 0.6%. Remember, it's a truncated week. We came out from our holiday yesterday, and a combined effect of what happened globally on Monday, which we missed out as well. But we're going strong. Let's take you through the headlines. Markets are gaining momentum towards the last hour of trade. The Nifty trades above the 10,900 mark. Most sectoral indices are trading with gains. Tata Motors is the top gainer on the Nifty, gaining the most since October 2016 after JLR sales in the US sprung a positive surprise. Motors has posted its biggest intraday gain in 5 years, despite its February sales falling 14% compared to the last year. And the Nifty IT index is the only sectoral laggard. Tech Mahindra, Wipro, Infosys are the top losers on the Nifty. Good afternoon, Neeraj. A really interesting start to the week.
And the banks are supporting the start very well, Devina. So about 1.2% up for the Nifty Bank in the session. Good afternoon, viewers. Really strong show put up by the banks. This is the principal reason why this is happening. Bring up the VIX as well, and let's see what the VIX is doing. All the key benchmark indices are perched at the highest point of the day right now. Volatility's come off about 3.2% lower at 15.75. So from those highs of 18.9 seen about a week ago, we've now cooled off quite substantially on India VIX as well. New series, of course, also playing its part. Bring up the heat map. There's an overwhelming red at the start of the show. Now it would have changed on quite dramatically. Exactly a mirror image. And look at the gainers. The gains are very, very strong. So in the morning, it was all about Tata Motors being up 9% in the index heavyweight. But a clutch of names giving company now. HP, IOC, BPCL, all three of them doing rather well for themselves. Eicher Motors started off in the red, currently up about 5.5%. Axis Bank about 3.5%. Hero Motocorp 3.5%. So both Hero and Eicher had missed what the estimates were. But look at the moves that have happened into each of them. ICICI Bank, IndusInd Bank. So essentially, large private banks are seeing some buying in the session today. Large oil and gas names are seeing some buying. Autos are seeing buying. Hardly any pockets which are soft. IT, I believe, a bit of rotation last week as well was amongst the top gaining indices. But when high beta moves into favor, you would probably see IT stocks come off. So that's essentially what's played out on the large cap end of the market. But hey, the mid caps and the small caps the last few days have really shown some serious traction.
Yeah, and a lot of interest that's building in, and we've been hearing it from market commentary as well, as to how some of these beaten down stocks are gaining favor in the mid cap and the small cap pocket. Maybe not necessarily individual themes, but just the fact that these stocks have really given up a lot since last year itself. Taking a look at some bigger movers in today's session, 21% on Suzlon now at 7.25 odd rupees. You've got Jindal Stainless, which has been popping a good punch today in the session. You've got 17.5% on the stock. And Dilip Buildcon, this stock is up almost 50% in the last 1 month. We'll tell you exactly what's going on with this stock. But today's session too adds weight, 11% higher on Dilip Buildcon. What's the other pocket, aside from the financials that's gaining traction, are some of the other brokerage stocks. So you've got the likes of an Edelweiss. Religare is up 16% again. Edelweiss up 10%. IIFL Holdings is up 5.5%. Remember, Religare, Friday session, Thursday session, 20% each day. So the stock has actually moved up pretty significantly in just a matter of a few trading days. The other one being a few stocks which are gaining on the back of heavy volumes. GVK Power and Infra, that has been gaining great traction since the time of the news of the stake sale in the Mumbai airport. The stock's up 9% today. NCC has moved up. Repco Home Finance 10% as well. Near their 52-week highs, we've got Muthoot Finance. That's drawing top slot there, about 8.5% higher. And RVC and PFC, both of these stocks in focus as well. Today's news suggesting that PFC is not ready to pay more than 12,000 odd crores for the stake for REC. So both these stocks, though individually up, but they are trading near their 52-week highs as well, Neeraj.
Okay. Well, let's get started with conversations with our experts. By the way, keep in mind, as we said, 0.5% up for what's happening for the benchmark indices. And foreign flows the last few days have been pretty strong. Positive side for the Indian markets. The last 6 days numbers, at least, if not more, we've seen an average of close to 500 odd crores coming in every single day. Not a very large number, but the fact that the number is positive augurs well. Let's get in somebody who looks at flows, speaks to international clients very closely, and tries and gives us an indication of which way the global investing community, particularly perched in the North American region, would be looking at the Indian markets. Karun Marwah, director at Motilal Oswal Group, joins us right now. Karun, good having you. Thanks so much for joining in.
Thank you for having me.
Pleasure is all ours. First, just to set this into perspective, what you and your unit do is essentially go out and talk to international money for investing into India through you, right?
That's right, essentially.
Okay, so I'm guessing that you would have a pulse of what the international money bags are feeling about India, and when are they looking, and how big are they looking to invest into India? What's your sense about the recent last 1.5 months, which has been full of events? The cross-border stress that we've had, elections coming around the corner. What is the international money bag? What are the international money bags saying?
Right. If you're asking me from an immediate perspective, Neeraj, obviously there is a lack of immediate momentum because of the various incidents that are taking place either at the border or with regard to the looming elections. So I can just address it maybe first by saying from an immediate perspective, there could be passive flows that are extremely influenced by what's taking place around us. But if you extend that from a medium to long-term perspective, I think many of them see this rather as noise rather than really events that would immediately impact them for a medium to long-term perspective. So at the immediate sense, yes, I think people are looking to watch. Agnostic to what takes place more from a border perspective, I think elections are something that a large part of capital has been waiting to take a call on and then decide which way they want to head. But again, as I mentioned, this is primarily more shorter-term capital, or a little lesser than medium-term capital that would be influenced by such macro events. And there is a view that we would wait and watch till the elections get done and then see which direction to head to.
So the really long-term capital, have you seen signs of deployment through you or otherwise from those guys, even in the last 1.5 odd months into India, or do factors like elections, valuations, etc. all play?
No, for the part of the business that we focus on, which is really to get medium to long-term capital, I wouldn't say that the last 1.5 months has been influenced at all. In fact, I would just say that long-term allocators, endowments, pension funds have enhanced the amount of work they're doing on them, and they really, the diligence with them spreads many, many months, or at sometimes a year to two as well, to really decide what they want to do. What hasn't changed is people are very clear this is a geography we want to get in for the long term, right? I think what's influenced is what can happen immediately on the short term. So I would answer this way, rather than what's taking place in terms of a skirmish or in terms of elections. I think people are more staying away on account of valuations of India as an emerging market vis-a-vis the emerging market basket at large. And India seemingly looking a lot more expensive because other EMs really came off in CY18 a lot greater than we did. If you ask me, I think that's probably making foreign investors stay on the sidelines rather than, as I would call, the macro or more events that, we all obviously obsess with a lot because we're sitting right here. I think that's probably a lesser factor for them as much as valuation, which is far greater.
Do you think that at this point in time, while we're talking about valuations being slightly more steep, but this is the fastest growing country in the world. I mean, growth potential is massive in a way. 7.2%, you don't see that
That's right.
often. But the fact that, if we do see, the trade tensions ease off in China, bulk of the money could go back into China, and then therefore you could see a dry spell, a bigger dry spell for India, let me put it like that.
Yeah, I think we're already going through a dry spell with regard to foreign flows. You really haven't seen a large amount of capital in 18, and that's not showed up clearly in 19. You're absolutely right. I think China looks extremely attractive from a valuation perspective vis-a-vis India. And you're absolutely right. If the trade war finds some conclusion between the two powers, you would see a clear flow of capital first towards China. Also, if you look at the base and the opportunity set there is far greater than India is at this stage. We're obviously getting there. We are at 7.2. We're growing as well fast. But if you see the economically, China is far greater. So yes, your answer is right. At the valuations that they stand today, they'd probably see a faster flow of capital.
So how does India make that cut? I mean, from a foreign investor standpoint, while obviously there's no India-specific allocation that they have, it's more of an emerging market allocation that they make. What does it take for India to cut it?
I think there's adequate capital to go across many of the major economies. I don't think it's a question of if money were to flow to another EM money is not going to flow to India, or vice versa. I think it's, you have various pools of capital. Some are endowment pension fund, which are extremely long term. I think the direction they're looking at and the geography that serves them well is most likely India, right? Because we have a structural growth story behind us. There could be certain degrees of momentum capital that may or may not dabble with India. There could be, maybe certain degrees of momentum capital that finds maybe Russia is far more exciting and Brazil is exciting. I think we shouldn't try to paint all pools of foreign capital under one swab. I think there are different pools of capital. Every investor appetite is different. And
not just from an equity standpoint, even from a debt standpoint. So within India as well, when you're looking at foreign investors, they're going to be taking a call on the debt market. They're going to be taking a call on the equity market.
Absolutely.
On a different basis.
Absolutely.
Altogether.
So you'll be at different points with regard to the debt, different points with regard to the equity.
So what is that one common thread in all your conversations that comes about with regards to India?
Growth. I think it just comes down to growth, right?
Yeah.
So if you see pension funds need to deliver about 7.5% on their assets, to pay off their liabilities in the Western markets. They're making 4.5 to 5%. Where are they going to bridge that gap? That gap is going to come from emerging markets. And then when it comes to India, you're right, 7.2% it's growing at a far greater size of an economy. Now we're $2.5 trillion, which was a $1 trillion decade back. It makes it interesting for them. But if you really ask, they're coming for structural growth to India. Those are the two words I'll put it down to.
Interesting. Karun, so you're saying that the near-term moves haven't really gotten people too worried. My question would be in terms of longer-term allocation as well. Would India continue to see a dry spell until some of the other equitable, comparable emerging markets play a bit of a catch-up in terms of valuations because India would be at a substantial premium? Or would you reckon that some amount of flows would continue coming into India even though the larger proportion might go into the other EMs?
Yeah, I would be on the latter. In fact, I'm not in the camp that says you're going to see a prolonged dry spell clearly. And I don't think flows into India are going to be driven as much by what happens with the other EMs. It's important, but that won't be the sole driver. I think which will...
Karun, sorry, I just have to interrupt here for a moment because we have Mr. K.K. Mistry on the phone line. The National Housing Board has sought comments on a proposal seeking to increase the capital adequacy ratio threshold for housing finance companies. Mr. Mistry joins us right now on the phone for more. Mr. Mistry, thanks so much for taking this call. I understand you have a flight to board. Your initial thoughts on this proposal, if I may use that term?
Well, to be honest with you, this is not something which was completely unexpected. I think once the IL&FS crisis happened in September, at that time there were a lot of analyst reports which talked about the high level of leverage that some of the NBFCs or housing finance companies were carrying. So in that context, it was expected that at some point of time, RBI or NHB would come out, RBI and NHB maybe, would come out with guidelines which would restrict the amount of leverage that NBFCs or housing finance companies could take. So therefore, this is not very surprising. It doesn't take us at least by surprise. It doesn't have a material impact on, it will, to my mind, not have a material impact on too many players. So I don't know what kind of capital adequacy and what kind of leverage some of the NBFCs are carrying. So NHB would be the best position to know that. But at least as far as HDFC is concerned, there is no impact whatsoever. And to my mind, if these regulations are implemented for the next 5 to 7 years, I don't see any impact whatsoever on HDFC.
Okay,
Our capital adequacy Tier 1 stands at 17.2 and Tier 2 stands at 1.7, giving us a total of something like 18.9. And even if you get to a 15% here, 15% capital adequacy as has been suggested in the notes, that 15% would be a combination of Tier 1 and Tier 2 capital. So it would be possible for us theoretically, even if we get to a level of 15% Tier 1 capital over the next 4 or 5 years, to raise more of Tier 2 capital, which would therefore ensure that we don't need a capital injection for many, many years. As far as the leveraging of 12 times net own fund is concerned, we are very, very comfortable over there. We are significantly lower. Our debt equity ratio in December stood at 4.7 times. And as far as the deposits being curved at 3 times net own funds is concerned, that also we are very comfortable. Our total net worth is about 70,000 crores, a little over 70,000 crores. The net owned funds might be a little lower because we have to reduce the investment in the bank from Tier 1 capital for calculating the net owned funds. But even then, the amount of leeway or the amount of cushion that we still have on deposits will be substantial.
Okay, Mr. Mistry, I think that explains it all. Thank you so much for taking the time out and being with us today. Have a safe flight. That's KK Mistry talking about there not being any kind of major impact because of this proposal. Apparently, the proposal is that 1% hike in car every year till 2022. NHB proposed car to be about 15% by March 31st, 2022. Okay, back to our conversation with Karun. Karun, sorry, you were making that point as well about the other EMs catching up versus India or the other way around.
Yeah, absolutely. So, if you see the questions so far have been about what are the immediate events happening, that's one piece. The other one is evaluation of the various emerging markets versus us. To your questions about what would really drive the flows into India, I think the larger, bigger picture is if you see valuation disparity between developed markets and emerging markets, they have been lopsided, and historically, in fact, the skew has only grown over the last 6 years, right? The developed markets trade at far more expensive valuation than emerging markets. I mean, logically, it should be the other way around. If you really ask me, I think US markets have seen a massive bull run. I know they fell off a bit and have again come back closer to the highs, but the point remains that, they have just that much engine left in them to move further. I think the clearer, larger impetus of flows to India and other EMs is going to come from that reversal that has to take place. There has to be a reversion to mean. Valuations of EMs have to be higher than developed markets on a longer term basis, and I think that reversion to mean is what you're going to notice, and that's where pools of capital, largely North American, are going to flow into markets like India, and I think that's when you would so-called, say this dry sell would move. And I have started to speak to allocators that have started to make that change and reverse the flows out of India, out of the US, even if so partially, and more into EMs like India, which are structurally have a high growth phase ahead of them. So I would look more for that event rather than, the more near-term ones.
So what is the clear and present danger to this outlook from allocators to India? What's the risk that they perceive that could seriously impact the decision that they make whether or not they want to go big on India or not? Is it volatility? Is it the currency? Is it oil prices? What would it be?
I don't see any clear and present danger for capital not coming to India. I, again, want to be very, very clear. I think from the short-term perspectives, you might say capital is not coming to India for X, Y, Z reasons, but you've got to lift the cloud and look beyond the next 5-7 years. I think where else do you have an economy of this size, growing at 7.2%, giving you structural opportunities of growth in such basic items like whether it's air conditioning, whether it's banking, whether it's insurance, and you get this in a structural fashion. I think there exist few markets like India that would give the depth and reach and access for investors that we do. So I don't see any medium to longer term risks that upset this apple cart. I think foreign flows to India are probably yet to see the strength that India can garner, and I don't think we've seen that in the last 10-15 years either. I think what we're going to get ahead of us is going to be far greater. If you ask me short-term risk, yes, the Iran oil sanctions extension of 7 months, which expire in May, is that a near-term risk? That's a near-term risk. Would that have an impact on INR? It could potentially have an impact. Is there an election risk? Yes, there's a short-term election risk, which way it flows, right? But outside of those, I don't think these are anything that strategically changes the way people are going to look at India. I don't see anything that upsets that story at all.
Okay. Great, Karun. All good having you. It's the first time we are interacting on the platform, but look forward to having you more often.
Thank you so much.
And all the best.
Thank you. See you.
That's the view from Karun. Marwah. He's the director at Motilal Oswal Group. Looks at the international money coming into India through the Motilal Oswal Group and believes that there is very little in terms of long-term impediments to long-term capital coming into the country. Short-term, maybe the elections, maybe the relative valuation difference could all be weighing in on how money managers decide to allocate capital. But I must say, if today was a day when you would have looked back and thought about what money managers would have done, well, it's turning out to be a remarkable day because we are up almost 75 points on the Nifty, 1.3%, 357 points up on the Nifty Bank, Sensex 225, and as we said, a whole host of names are doing reasonably well for themselves in the session. So from the large cap end to the mid cap end, the gains and the gainers are very, very pronounced. 3, 4, 5%, the order of the day for a clutch of mid caps, small caps, as well as large cap names. So that is what it is looking like right now. Very, very strong.
All right, that's the mid-cap index there, 2% higher. But who would look at Suzlon Energy in the last 1 month? It's a small stock nonetheless, it's just 7 rupees. But in the last 1 month, the stock's up 100%. And that move has actually come in the last 10 to 14 odd days. Last 2 weeks particularly for Suzlon have been extremely promising. That one, then you have Religare within the smaller brokerages, which is doing well. It's the 30 rupee stock, but 14% again today. In the last 7 days is up 50%. So really, last 1 month rather, really big moves coming in across the board for mid caps and small caps. But on to some more corporate news. Shemaroo has announced a strategic tie-up with Vodafone India. Together, they have launched a new video streaming service, Shemaroo Me. Subscribers of Vodafone Play and Idea Movies will have access to Shemaroo's content library. Let's get more details on this with Hiren Gara, the CEO of Shemaroo Entertainment. Mr. Gara, thanks very much for taking out the time. Could you throw some more light on this particular deal and what it entails?
Sure. So basically, we have launched Shemaroo Me as our OTT video streaming service, and this is a tie-up with Vodafone, where Vodafone Idea. So on both the platforms, we will be bundled as a part of their streaming offering or their content offering to their various subscribers.
What does this bring on the table for Shemaroo?
So essentially, the way it works for us is that it gives us access to, the consumer base of Vodafone and Idea, and it gives the consumers of Vodafone and Idea access to the content, which is extremely rich content in terms of. So we've got at this point 7 different segments. So there's a Bollywood classic, Bollywood premium, Gujarati, devotional Hindu, devotional Islamic, kids, etc. And all of this premium content, which otherwise is paid, is available to the consumer of Vodafone and Idea. And we worked out overall in terms of, for us, it's access to the consumer.
Okay. How many titles in total right now up on offer via this tie-up?
So overall, for Shemaroo Me, we have access to so Shemaroo Me consumer will ultimately have access to more than 2,000 titles. At this point, roughly about 50 to 60% of that are live, and rest in phased manner will keep going live on a weekly basis. There are different titles that are going live.
Okay. Hiren, how does the typical revenue sharing happen in such a thing? Is it based on the clicks, etc., or is it an annual run rate that comes in? How is this revenue accretive for you?
So, unfortunately, I'm not at liberty to discuss about the exact nature of the arrangement, but at a broad level, what I can say is that, normally how these deals are structured, these are typically B2B2C kind of deals, where the access to the content is available to the consumer and access to consumer is available to the content partner. And based on consumption or some parameters, these are, some value is put based on parameters, like either it could be on a per subscriber basis or it could be on overall minutes of consumption basis or different. There are a couple of other parameters that kind of are in terms of the models.
Okay. Hiren, if I'm not wrong, very recently you guys became one of the largest viewed subscription platform on YouTube or otherwise. My question, or one of the larger ones. My question to you is, does this deal in any way cannibalize on the existing viewers who are viewing your content through your own platform?
No. So basically, we recognize that India is a very diverse market in terms of consumer tastes and preferences, as well as in terms of paying patterns. So there is a large set of consumer in India that doesn't pay for content. So what we've done is we've segregated our own library in terms of premium and non-premium content. So the non-premium content is available on free ad-supported platforms such as YouTube. versus for Shemaroo Me, which is a premium subscription service, the content which is available is, has been carved out from all free ad-supported platforms. So in that sense, these are two different libraries that we have carved out and windowed out, strategically right from the beginning, because that's really how we want to look at the whole business model.
Yeah, Mr. Gara, thank you so very much for joining, and really appreciate you taking out the time. Mr. Hiren Gara there of Shemaroo, talking about their new tie-up with Vodafone Idea. Well, let's move on and talk about a specific stock. As always, we're putting the spotlight this afternoon on a stock called Dilip Buildcon. The stock is up in double digits today, and it's not just today's session. Today, the stock's up about 11.5%, but in the last 1 month, the stock has moved up about 53%. This, again, should be viewed in light of what it's done coming off from its 52-week low from a high of more than 1,100 rupees. So the prospects of Dilip Buildcon just seem to be improving. Q3 was not bad. They had an 8% beat on their net profits because of the lower taxes. For Q4, the guidance and what we've managed to gauge from the conference call that they had is that they're going to see a strong order inflow. Overall, they're going to look at about 3,000 odd crores in terms of revenues for Q4. Total revenues about 9,500 to 9,800 crores for FY19 is what they have is guided for. 7 to 18 odd % in terms of the margins figure is what they're looking to clock in. Order wins for Q4 expected around 3,000 to 4,000 crores, and for the entire year, more than that, closer to about 11,500 odd crores. So on all parameters, they seem to be doing well. The order backlog of about 23,100 odd crores is what they have, gives clear visibility as well going forward. 85% of that is coming in from government-backed entities. So this one is another positive that's coming in. Aside from that, the overall balance sheet as well, they're looking to make sure that they get a strong balance sheet going. So gross debt to equity has been coming off. In Q3, we had 1.24 times, which came off from 1.3 the earlier quarter, which again was lower than 1.39, which they clocked in the quarter prior to that. On the net debt to equity, they're hoping to be below 1 time by the time they hit FY19. And so on all parameters, at least they are looking to punch in all the right numbers. Let's take a look at what's been happening with regards to the volume. So you can see the 20-day volume average and how this has moved in terms of the average thereabouts. So a lot of interest that's been coming in on this counter. The last few days, the last 1 week itself has been extremely promising on the counter. Analysts also extremely positive on this. So around 88% of all analysts have got buy recommendations on a Dilip Buildcon. Potential return, 30%. The stock's still got a potential return. Remember though, but it has come up from really high levels. Its 52-week high was somewhere close to 1,100. But nonetheless, 650 odd is where the consensus 12-month target stands for the Dilip Buildcon. And as you can see, all the bigger brokerages have given it a buy recommendation with that target price. So looking optimistic on Dilip Buildcon, Neeraj.
Well, and the volumes are certainly surging in today's session as well. So DBL doing reasonably well for itself. The quarter gone by was decent. Execution was in line. And as Devina spoke about the guidance, that is looking okay. Balance sheet is improving. Maybe not too many reasons to sulk. And that's why the stock could be doing what it is doing right now. Okay, before we get in our battery of live experts on board and a clutch of them today to talk about a lot of things that are flying around, let's hear out from Manish Gunwani. Indian equities may provide good returns over the next 2 or 3 years. That is his view, and he's placing this on the back of earnings recovery and easing rate cycle. In a chat with Bloomberg earlier today, Manish spoke about the turnaround he's witnessing in the Indian economy. Listen in.
What we've seen over the last 3-4 years is a lot of large sectors went through a down cycle. So whether it's corporate banks, cement, telecom, pharma, and some of them are now starting to turn around. So on consolidated basis, you're seeing pretty good earnings growth. Our sense is over next 2-3 years, you will see around 20% kind of earnings growth for the headline index.
Would that be enough to sustain foreign interest in India, given the changes, the tweaks that we're likely to see in the MSCI, greater weightage on China? Could that impact India?
So, look, it's difficult to call the relative performance of India versus EM, but if you look at India in absolute terms, I think it can provide good, steady return because end of the day, we are the fastest growing nominal GDP country. There are a lot of companies which have gone through this down cycle, which are recovering. We'll see very strong earnings growth for next 2-3 years. The domestic flows remain strong. There's a interest rate easing cycle hopefully in front of us. So when you put that all together on a 2-3 year basis, I think you'll get reasonably strong returns from the Indian market.
Manish, talk to me about what's happened this year, though, because it's a confluence of events. We've had, on the one hand, naturally, people looking at the election, the upcoming election, may not see a return of the BJP-led coalition. On top of that, we've got valuations historically high and remaining thus, and a lot of debt issues there as well. So, Manish, these do contrive together to make the market a little bit less attractive, wouldn't you say?
So if you look at valuation, I think you have to see it in context of the earnings cycle. Now, if you see what's happened over the last 5-6 years, the growth in headline index earnings being around 5 to 6%, which is obviously much less than the nominal GDP growth. And as I said, a lot of large sectors went into a down cycle. Now, they will come back, and therefore the earnings cycle, I think, will be pretty strong, backed by the fact that rates could see a downward drift. So in that sense, yes, valuations are not super cheap, but as I said, if earnings are strong and the rate cycle is easing, it will provide a backdrop for consistent returns over the next 2-3 years.
All right, bringing in our technical experts, and Amar Singh of Angel Broking is joining us on the show. Along with him, Sacchitanand, the Uttekar of Tradebulls, is here with us as well. Gentlemen, good afternoon to both of you. I'm going to start off with the roar with which the index has moved up in today's session. We've crossed 10,900. Let's see whether or not we hold past those levels yet on 10,950 now. Let's start off with you, Sacchitanand, your index trade.
Good afternoon. In fact, what we have seen so far is just the beginning of a renewed momentum. In fact, if you look at the overall strategy, the index looks poised to move above 11,000 very soon. So with that intention, I think this is a fresh momentum which has begun. Stop losses can be placed somewhere close to 10,880, and still long positions can be built in Nifty. We are expecting a move towards 11,020 very soon.
Amar Singh, what about you?
Yeah, good afternoon. Looking at the way Nifty has bounced back and currently it's around 10,950. Technically, I would say, looking positive on the charts, it has taken some very strong support around 10,830-850 zone. So I would say any pullback definitely can be used as a buying opportunity. Ideally, somewhere around 10,950, 920, 25 zone can be used as a buying opportunity with a stop loss below 10,880. And a target of 10,985 on the upside.
Okay. So looking optimistic from both Sacchitanand as well as Amar. Let's take a look at some stock ideas as well this afternoon. Amar, I'll keep it with you.
Yeah, the first stock one can look at is ICICI Bank. If you look at ICICI Bank, this is one stock which was in for consolidation. And it was unable to breach the 355, 357 zone. Technically, on the long-term charts, the stock continues to remain positive. On the weekly charts, it was consolidating for almost 5 to 6 weeks. It has breached a crucial resistance zone. So this is one stock one can look at buying, but any pullback, not at the current levels, any pullback towards to 355 levels can be used as a buying opportunity with a stop loss of 343 and a target of 375 in the short term. And the second stock one can look at is Tata Chemicals. If you look at Tata Chemicals, what we are seeing is that the stock has corrected significantly, and from almost 800 levels, currently it's around 578 odd levels. Technically, it's trading close to very crucial support zones on the weekly charts as well as the monthly charts as well. On the daily charts, there is some bullish momentum, and also there is some bullish divergence on the chart. So this is one stock one can look at. So currently it's around 578, 79 levels. So any dip towards 574, 576 can be used as a buying opportunity with a stop loss of 559 and a target of 608 on the upside.
Okay. Sacchitanand, your stock ideas?
Well, we have three stocks on our radar. First one being Reliance Industries. Now, this particular stock has still not moved, and if you look at the overall structure, it has been consolidating for last 2 weeks. 1240 is the resistance level wherein a lot of put call writers were very active. But suddenly we have seen some unwinding here, and we are expecting that this particular action could lead to a fresh breakout. So with that intention, a stop loss can be placed around 1210. And we are expecting that the move could extend right up to 1285. So that will be my positional target on Reliance Industries for fresh longs. Second one, a very common one, ICICI Bank. Yes, we have seen a very strong recovery in last 3 trading sessions, where the stock is now confidently trading above its 360 mark. We are expecting that this particular move can extend right up to 370. So from a momentum perspective, a stop loss can be placed somewhere close to 353, and longs can be added in that. The last one is Grasim, wherein we have seen a consistent trend on most of the cement numbers. And if you look at Grasim per se, we have already seen a good elevated move. Still, I think there is a good amount of headroom left right up to 845, 850 mark, which can be participated with an 800 call option. A stop loss can be placed somewhere close to 24, and we are expecting a target of around 40 to be achieved in this week.
Okay. Stay on, gentlemen. So much more to talk about. We'll talk about Tata Motors as well. It's amongst it is still now the top gainer on the Nifty after JLR posted a sharp rise in its US sales over the extended weekend. Yatin's back with the details of this and some more which could have led to the stock doing so well. Yatin, good afternoon.
Good afternoon, and it's a good afternoon for Tata Motors as well. After 2013 probably. We have seen such a stellar rally coming in for Tata Motors on an intraday basis. Last time this happened somewhere in the second half of 2013, wherein we saw a 10% spike intraday. Right now also Tata Motors is holding its gains 8% up for that stock, and this is largely to do with a couple of factors, including the US sales, which have seen a growth of nearly 29% on a year-on-year basis. And if you break down the numbers, Jaguar sales are up nearly 59% at almost 3,500 units, and if you look at JLR Land Rover also, there also the sales is above 8,150 units. That is again a growth of 19%. So combined Jaguar and Land Rover, the growth is almost 29%. And more importantly, the CEO of JLR North America said that this is one of the best retail months so far in the month of February for Jaguar Land Rover. This is largely to do with the momentum in sales of Discover Sport, Range Rover Sports, Jaguar SE and F-Pace. So all of these 4 variants which are new in the marketplace are doing well for JLR. And of course, this is much better than the peer set. So if you look at luxury car makers like Porsche, BMW, Mercedes, Audi, all of these have seen a weak growth compared to JLR. In fact, if you look at Audi sales, Mercedes sales, they were on the declining side in double digits. And if you look at BMW also, it has seen almost a flat growth on year. So this is a month wherein JLR has not only outperformed its peers in the luxury car segment, but it's one-in-a-kind number wherein we have seen record sales for the month of February as far as JLR is concerned in US.
But does it warrant this big 10-11% intraday move, because the bigger market is China?
Yeah. So Devina, US is an important market. Of course, the Chinese and the European sales are slowing, but there are a couple of factors. One is a multi-year low level for Tata Motors in terms of valuation, in terms of share price. Number 2 is the recent action from Tata Sons. They have bought shares from the open market few weeks back. Nearly 1.18 crore shares is what they bought at an average price of 155 rupees per share. Not only that, last week Bloomberg had a report saying that JLR is looking at various options to sell stake. It can be in the form of IPO, it can be a form of JV, it can be a form of stake sale to select investors. A lot of probabilities is what Tata Sons is working, according to the news report, which was of course denied later by the promoter group and Tata Motors. But all of these news bits together, along with a weak share price,
valuation.
yeah. So we have seen a bounce back, which was probably due to happen. And not only that, look at all the auto companies, be it Eicher Motors, Ashok Leyland, despite reporting weak numbers, all of these stocks are up. So probably the auto sector as such, which is correcting since the festive season, November, December, is witnessing a bounce back after the Feb numbers which have come in.
Right. Yeah, then thanks a lot for that. That is Tata Motors in focus. In fact, let's talk about Tata Motors and the rest of the auto sales numbers that came out for the month of February with Ashwin Patil of LKP Securities. Ashwin, thanks very much for taking out the time. Just keeping it with Tata Motors then and the US retail sales numbers, which have really caused a lot of excitement in the stock. Aside from the sales numbers, there are other factors which are also probably aiding the move on the stock. But how did you read into it?
Yes, just how Yatin pointed out just now, there are certain factors which have impacted the stock movement today. First of all, the JLR US sales, which have actually it has actually beaten the entire US auto pack, and the growth which has actually come at very stellar levels for about 26% growth in the month of February, because on the back of 4 launches, the success of 4 vehicles that Yatin mentioned earlier, that is riding the stock performance. And second, we know that in the holding company Tata Sons has showed a lot of interest in the Tata Motors and has bought a certain amount of shares through block deal over the last 1.5 weeks. And that shows the company is very much upbeat about the upcoming prospects for the company. And we also know that there were talks, rumors, I would say, because the company has not yet confirmed, they have denied it, that they are doing a lot of restructuring in the form of whatever means in the coming months. So all these factors will be taken positively in the stride. And actually this movement today, which we have seen, has come after 2013 and in the intraday rises. And we know that though the domestic market, the commercial vehicle markets are in trouble currently, but there is a lot of hope from our side that going forward with BS6 implementation expected to happen by April 2020, FY20 will be a good year. Starting from the second quarter itself, and after that, if there is a high likelihood that the scrappage policy gets implemented by April 20. So in that case, I think there will be a multi-year demand which will get triggered for commercial vehicles post that. But currently, we know that there are certain issues like the axle norms and the high base of last year and finance unavailability, which are leading to the commercial vehicle industry to be in a red territory currently. But yes, I would definitely wait for a similar kind of numbers from JLR from US in the coming months, as well as improvement in Chinese and European as well as UK markets. Then only we'll be in a certain position to say that we can look at Tata Motors on long-term perspective from these levels.
Ashwin, good afternoon. There was a Bloomberg exclusive on Friday about a possible stake sale, early stages, very early stages, which the company denied, which was carried in the story itself, to which, and then the company, of course, come out and later denied on the formal platforms as well. If this were to happen, though, would you view this as a net positive, or is this a net neutral event?
It would be a net positive event, because we know that there is a lot of value which is unlocked, which is currently locked in JLR, and the combination of domestic business and JLR is actually dragging the overall numbers. So the domestic business they are having their own triggers, and JLR is having their own triggers. So whenever there is improvement, definitely we can see a bounce back in both the businesses, and definitely, I mean, that the separation would be positive for the entire Tata Motors as a whole.
What about the other auto stocks today? I mean, despite posting in numbers which were slightly sub-estimates, the two-wheeler companies have moved ahead. Eicher Motors, Hero MotoCorp, etc. Is it a factor of stocks having been beaten down so much that people are seeing buying? And what would your advice be to your clients?
Yes, I think that since October, November, we have seen a lot of selling happening in these counters on the two-wheeler side as well as on the passenger vehicles, the commercial vehicles. The entire auto pack has been suffering for over the last 3-4 months. And now after February, I mean, okay, the sales may have come below our expectations, but they are not significantly below anybody's expectations. And there are hopes that going forward there will be a good revival in the auto numbers in FY20 with BS6 implementation coming in and the marriage season coming in which would be positive for two-wheelers as well as the passenger vehicles. There are certain launches which are coming up from Maruti and Tata Motors. The Harrier is coming up from Tata Motors stable. Mahindra has come up with good couple of launches, and hence I think everybody is thinking that let's give this sector another chance, because definitely the crux of the economy, the wheels of the economy is the auto sector, and definitely I think that that has worked out well for the sector today in the trade.
All right. What about some of the other two-wheelers, Ashwin? Hero MotoCorp, a dip of 2%. Bajaj Auto, though doing fairly okay. Exports have also grown pretty steadily, about 16%. And even a TVS Motors, not a really bad show.
See, Hero MotoCorp is definitely ruled by rural sales and all, and since that insurance increase had happened in the month of September, Hero has been suffering a lot because they are into the low in the mass market segment, and an increase of about 8 to 10% on the increase on the insurance is a big amount for the rural customers, and that's the reason why Hero has been trailing under pressure over the last 3-4 months. And now they have recently launched a couple of scooters, and they are coming up with motorcycles also, and the marriage season is coming up. So I think that there will be gradual improvement in the volumes coming up. And as far as talking about Bajaj Auto, exports have done significantly well, and exports are their trump card right now. Otherwise, on the domestic motorcycles, they have posted about 6% growth only. So that is quite moderate performance from the domestic business, and it's expected because the entire industry is not in a in a buying mode currently on the domestic front. But if you see the three-wheeler business also, since there is lack of permits coming out now as compared to the same month last year, when there were permits which had come out in the cities of Mumbai, Bangalore, etc. But this year obviously there is a decline, and even the decline will get even more starker going forward. So these couple of companies have posted modest growth, and if you see TVS, the scooters performance has not been good. The scooter industry is under pressure currently. Although TVS launched the Ntorq 3-4 months back, it's the overall sector and the business is sort of under pressure currently. Otherwise, TVS has posted a decent kind of numbers this month as well.
Just one last question before we let you go. Your pecking order within the auto space in two-wheelers, four-wheelers?
See, on the four-wheeler space, we like Ashok Leyland. That's a top pick within the commercial vehicle space. If we have seen the numbers this month also, they have posted just about 2 to 3% decline on the MHCV front as well. and they are doing good on the margins front as well, despite giving so much of discounts and lying in an industry which is under pressure. But easing of finance availability and the overall, their the market share gain and all that the company is seeing currently, I think that is one of the best placed stock within the industry, followed by Maruti, M&M, and up to some extent we like Hero also in the auto pack.
All right, Ashwin, we'll leave it at that. Thank you so very much for joining us this afternoon with your thoughts on the entire auto pocket right now, which is one of the top performing sectors in today's trade, at least, with Tata Motors leading from the front. Avinash Gorakshakar of Joindre Capital Services also joining us on the show. Avinash, good afternoon to you. An interesting day of trade. We're at the high point of the day on the index, making our dash towards 11,000. But interestingly, 11,000 is the maximum that most brokerages have given to the index for the entire year. And we're already at it in the month of March.
No, I think today's rally has been quite surprising, and I think notable part has been that several mid caps have started moving up, and I think the sustainability of this rally is very important. I would believe that we still remain positive on frontline sectors like capital goods, cement, where we are seeing actually some kind of green shoots and some sort of positive commentaries coming out from the management side. So I would believe, on the mid-cap side, or typically, from the auto side, the kind of reactions we have seen today, despite not a bad month in terms of volume numbers, most of the stocks have gone up. I think sustainability going forward is going to be very important. How these trends pan out for the next couple of months is very crucial, because if these numbers continue to be negative and we continue to see sluggish volume growth for the auto sector, especially the commercial vehicles and the passenger car segments and the two-wheeler markets, then I think clearly you could see some sort of profit booking coming here. But overall, I would believe that the markets are probably now entering a stage of some sort of a pre-election rally. We are going to get election dates by the 9th of March. So hopefully, I think the markets are looking as possibly a sort of rally just ahead of the election.
A bunch of stocks which are not necessarily only in news but beaten down, Avinash, flying around. We've seen that happening to some of the cooling solution companies. Symphony, for example, up 5%. One of your ideas that you had recommended, Sterlite Tech, is up about 7.5–8% today, 266. What is it that you've bought in the last 1 month when the mid caps corrected quite strongly, and I think is worth buying even now?
No, I think clearly we had looked at some air conditioning companies like Voltas, typically ancillary players which cater to the air conditioning companies like Amar Enterprises. And of course, Sterlite Tech was one of those companies, Neeraj, which actually came down to 210 odd levels. So I think these were the companies which were fairly attractive at that point of time, and I would suggest that hopefully this is a hotter summer for the coming year. You could see a lot of re-rating in most of these air conditioning and cooler based companies. As far as Sterlite Tech is concerned, I think the entire issue was revolving around the pledging factor, which I think had beaten down the stock beyond expectations. So I think the markets are now getting a sense that as long as the business does well and cash flows are generated and the order book is good, that is probably the reason the stock is getting slowly accumulated, even at these levels.
Getting some technical views as well. Amar, while obviously there was a consensus call on an ICICI Bank, within the IT pack, which is corrected in today's session, is there any sort of a trade on the likes of a Tech Mahindra, Wipro, Infosys, HCL Tech?
Yeah, looking in the IT pack, what we are seeing is that most of the IT pack stocks, they are witnessing some correction. And Tech Mahindra, I would say that it's currently around 810 odd levels. So it is very close to its crucial support zone, which is around 780–85. So any dip towards 800 levels can be used as a buying opportunity with a stop loss below 780 and a target of 845 on the upside.
Okay. Yes Bank continues to hold steady ground, while not massively in the green. From the lows of the day, it's definitely managed to bob its head back into the green. So 237.5. High point of the day was, I think, through 240 odd, from where it's come off a bit, a few points. But Sacchitanand, at current levels around 240, would you be going long on a Yes Bank?
See, if you look at the overall structure, I think the structure is still holding valid for a long, but if you look at from a momentum perspective, the stock is losing some steam. On the contrary, in fact, the stock has some resistance somewhere close to 245. So I would shy off from creating any fresh long positions here. Probably someone who was holding this particular counter can wait for a target of around 245. But on the other side, I think there is renewed momentum which is seen in a stock like HDFC Bank, and this is a better area where some longs, fresh longs can be considered. A stop loss can be placed somewhere close to 2080, and we are expecting that the headroom or the resistance somewhere close to 2160 would be again revisited. So I think from a trading perspective, HDFC Bank looks very lucrative now.
Some surge in the last few minutes for HDFC Bank, some surge in the last few minutes for Ahluwalia contracts. That stock is up 7.5 after they've gotten new orders worth 1162 crores, sorry, 8.27%. So a big move in Ahluwalia contracts in the session today. It's not usually a very liquid name, but the last 1 hour about 28,000 shares traded. Let's get Ahluwalia contracts up on the screen. Just a bit of a spurt. Slightly better than the average volumes on the NSE, that is. The other one which also got some orders was steel strips and wheels. Again, an illiquid stock, but which got some large orders today. And that stock at about noon or slightly post-noon surged a little bit in trade. 4.5% currently is where this one is trading at. And then, of course, a clutch of these other mid-sized names, which in the last few minutes have done well. Schneider Electric, Intellect Design, JK Tyre, a clutch of these names have done very well in the recent past, in the last 1 hour. Avinash, Gorakshakar, tire companies, I mean, autos are doing really well today. Auto ancillaries, tires, etc. Anything on the anvil, anything other than Bharat Forge, which you would believe is worth buying into?
No, I think within the auto component space, I think Motherson Sumi has corrected quite significantly. So I would
also bounced back from those 130 levels.
Yeah, it's bounced back. So I think clearly, something like Motherson Sumi could possibly give in a decent kind of risk reward. So I would believe, even companies like Sundaram Fasteners, which have a fairly good amount of, operating metrics, which have been fairly good, both on their local as well as international business. I think these companies could also be looked upon, considering that once the auto revival happens, Dheeraj, you're going to see a strong revival in these companies. And clearly, these are large vendors to most of the commercial vehicle, passenger car and the two-wheeler players. So I think Motherson and Sundaram Fasteners can be kept on watch and look to be quite attractive, from a long strand point of view.
A few other names that have made 52-week highs, fresh 52-week highs in intraday trade. Probably not trading around them right now, but in intraday trade did make them. One is Muthoot Finance. This one has made a new 52-week high of 578.85 intraday, though has come off from there. Volumes have picked up. It's up 7.5%. And the other one is Aavas Financiers. I made a 52-week high of 1145 in intraday trade, currently trading at 1110. That's up about 4% right now. Within the NBFC space, just Sacchitanand, I'd like to come to you. And I'll just put in Muthoot Finance since it's made a new 52-week high today. But I want to specifically focus on some of these brokerages and allied NBFCs. So you've got Edelweiss, which is up 10% in today's session. Religare, a smaller name within that pocket, is up again after 17%. It was up 20% on Friday, another 20% on Thursday. That stock's clearly, breaking all bounds on the upside. And IIFL Holdings as well, add that to the mix. How would you trade any of these?
Well, the setup for Edelweiss looks very promising. In fact, if you look at the weekly structure, the stock has been, declining since 15 odd weeks now. But if you look at the recent movement of the RSI or the weekly RSI, we have clearly seen a case of divergence here. A couple of weeks back, we saw a spike somewhere close to around 115 when the low was established. The closing for that particular week was somewhere close to 140. So I think 140 as a base has been very strong. I won't be surprised if the move or the move which has commenced right now to extend right up to 174, 175. So probably from a trading perspective, a stop loss can be placed at around 140. And I think this particular move can be dependable on the weekly setup. So expecting this move to extend right up to 170, 175, the stop loss for the trade should be placed at around 140.
Avinash, Edelweiss had gone sub 140. From there it's picking up. And this too has got a typical pattern that it trades in, but just from a business standpoint and from a long-term holding perspective.
No, I think clearly, around 139, 140 odd levels, it had come down to very attractive levels. And I think, even at these levels, looking at the kind of business model Edelweiss runs, they have a very less concentrated risk only on the broking piece and have diversified a lot. I would believe that if somebody has a medium to long-term view within the NBFC space, this is one of those companies which definitely has the bandwidth and the capacity to actually get re-rated significantly in future. So I would believe that, longer term, definitely we could see better numbers coming in. In the short term, the stock would remain volatile.
Well, let's take a break on that note. On the other side of the break, we'll get you the Fab 4 stocks of the day. At 3:15, we get you what dealing rooms are recommending in the session, and then some closing strategies a bit later on, coming up on Bloomberg Quint Live on Countdown. Stay tuned.
ये हैं जंगल के असली मालिक। छत्तीसगढ़ अगर 44% भूभाग में वन होने का दावा करता है तो इसकी वजह है आदिवासी भाई बहनों का त्याग और इनकी सरल जीवन शैली। जहां मांदर की थाप में इनका अनोखा नृत्य इनकी पहचान है, लेकिन इन आदिवासी भाई बहनों की सरलता को इनकी कमजोरी माना गया और इन्हें वाजिब अधिकारों से वंचित किया जाता रहा। 17 दिसंबर 2018 को मुख्यमंत्री श्री भूपेश बघेल ने शपथ लेने के साथ ही एक संकल्प लिया कि आदिवासियों का विश्वास जीतना उनकी सबसे पहली प्राथमिकता होगी और शुरू हुआ फैसलों का सिलसिला। तेंदुपत्ता आदिवासी संस्कृति का अहम हिस्सा है क्योंकि इससे होने वाली कमाई से ही इनका घर चलता है। छत्तीसगढ़ की नई सरकार ने तेंदुपत्ता संग्रहण पारिश्रमिक 2500 रुपए से बढ़ाकर 4000 रुपए प्रति मानक बोरा करने की घोषणा कर दी। एक बार में 60% दर बढ़ाने का ये अपने आप में पहला मामला है। इससे आदिवासियों के हाथ में जो पैसे आएंगे उससे वे अपनी मर्जी से अपनी जरूरत की चीजें खरीद पाएंगे। अपना जल, जंगल, जमीन और अपनी जरूरत के फैसले आदिवासी अंचल के लोग खुद करेंगे। आदिवासियों का विश्वास जीतने की हुई शुरुआत। नई सरकार ने जगाई नई आस। गढ़बो नवा छत्तीसगढ़।
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank. Good people to grow with.
Sports science is the science of performance. We look at all the variables that could give an athlete a competitive advantage in a high-performing environment.
He's been a sportsman, a successful coach, a sports scientist, a motivational speaker, a monk, and an entrepreneur.
How we navigate our body with physical, nutritional, emotional, spiritual health. That is what I teach people. Where to find balance, how to find balance, and the quest of finding balance more than anything else.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Welcome back. You're still with us here on Countdown. 27 minutes to go for market closing and an extremely strong trading session that we're seeing today. Should pull up what the European indices are doing at this point. That's the Nifty for you, up about a full percent. That's the highest point of the day, 1.1% higher. Global markets are supportive too, but no comparison to what the Indian equities are doing right now. A third of a percent higher on the FTSE 100, CAC marginally in the green, and so is the DAX. Dow futures up next on your screens, and whether or not they're actually following suit. 0.2% higher this afternoon. But it's an interesting play on what the turnover has done today. Remember, the cash market turnover is going to be important because that will probably suggest what kind of activity on the institutional side has also happened. So right now, already at 33,000 odd crores, that's a high number for almost half an hour yet to go for trade. So you could see probably a number of around 35,500 crores by the time we shut shop for trade. On the futures and options side, this is obviously the start of the new trading series, so you're not going to see that much of action on the F&O side, but the cash market volumes are slightly more encouraging this afternoon. Let's bring in then Yash Upadhyay to talk a little bit more about the Fab 4 stocks this afternoon and what have made it to his list. Yash.
Afternoon, Devina. I'll start with Mishra Dhatu on Midhani, as it's known better. It has received a big order. You were mentioning about Ahluwalia contracts. This one too has received a big order worth close to 475 crore rupees, on the back of which we are seeing that big uptake on the stock, up 10.5% in today's day of trade. That takes its overall order book to over 1,800 crore rupees, according to its press release. Philips Carbon is in focus as well, up 11% in today's day of trade, after the company in its investor presentation mentioned about its expansion plans to scale up its carbon black facility by about 240,000 metric tons by 2021. TVS Motor Company is up about 4.5%. This was the one player that managed to, report higher than expected sales in the month of February, up about 3% on a year-on-year basis. So good numbers coming in from TVS Motors. And lastly, I want to highlight Kaveri Seed Company, up 3% in today's day of trade. Some fresh longs seen there. High open interest built up. Max OI change of about 25%. So watch out for that.
Thanks a lot for that, Yash. So, well, those are some active mid-caps in the session today, and frankly, mid-caps is where the activity seems to be. Actually, just one quick trade perspective on the index or the Nifty Bank, which is up 500 points right now. Amar, would you trade the Nifty Bank afresh at these levels?
I would say that Nifty Bank definitely has rallied significantly, but not at the current levels, because if we look at Bank Nifty, in January, again, it had made a high of 27,600, and then 18th January, again, it had made a high of 25,576. So clearly reflecting that there is some resistance, but yes, any dip can be used as a buying opportunity, and support for Bank Nifty, immediate level of support for Bank Nifty is somewhere around 27,350.
Okay, and just one more technical view before we dwell back on the fundamentals. IndiaNivesh Housing Finance is up 9.5. Sacchitanand, you want to comment on this?
Well, we have been fairly positive on this particular stock. In fact, the way it has been shaping up right now, I still see a headroom right up to 755, 756. In case if someone wants to build in fresh longs, the stop loss for the trade would be a bit far now. 707 is the ideal stop loss. But on the momentum basis, I think there's still a lot of steam which is left. Probably a trailing stop loss strategy would be fairly good. But in case if we see a decline somewhere close to 730 odd levels, then probably this stock can be considered. We are expecting that this momentum should continue right up to 756 immediately.
Dharmesh Kant of IndiaNivesh Securities with us on the show as well. Dharmesh, any thoughts on NBFCs, IndiaNivesh Housing Finance? Some of the other large private sector banking names as well are doing rather well for themselves in the session today. Axis Bank at 731 would be notching in 52-week highs.
Yeah, good afternoon. I think the trade is back into cyclicals and aggressive plays. The BFSI stands to gain the most from this, trade setup. And this was long due as far as housing finance companies are there, because the cost of funds have come down. At the same time, the growth has been steady state. There has not been decline in the growth of affordable housing segment or mid-sized housing segment. And these companies, the Canfin Homes, Repco Homes, DHFL, LIC Housing Finance, DHFL you can keep it aside for time being. But other companies, they cater to the segment which is more to do with affordable and mid-scale housing segment. So this run-up was long due, and which has materialized as of today. But today the market is rewarding everything and anything. But the good part is all the quality names which were at a valuation discount has seen a good traction. I think this traction will continue for some more days and then the consolidation will happen. But yeah, pre-election run-up rally has commenced in the market.
Avinash, some of the NBFCs which are doing rather well for themselves include the Ujjivan Equitas gang as well. What's led to this? It's a 10% uptick on Equitas.
No, I think clearly some amount of relaxation by the NHP has, possibly given a little boost to these both these players. But I think if you see the numbers, Neeraj, for the third quarter, both Ujjivan as well as Equitas, reported a decent set of numbers. In fact, the commentary from Equitas was equally good. Our sense is that, in the microfinance space, earlier these companies were actually re-rated largely because of their small finance bank initiatives. But I think the core businesses now started moving in. I would believe that hopefully, the coming year, that is FY20, should be a much better year for both these microfinance players. And I would believe that, as and how the volume and the margins pick up on the core business, the SFP business also will definitely be looked upon closely. Although there have been some discussions that these SFBs would have to be hived off much earlier as per the RBI rules. But given the fact that microfinance is still in its infancy and there's a lot of headroom to cover, I would believe that Equitas and Ujjivan both could qualify as a good, reasonably good bet, if one were to look at the next, say, 12 to 18 months.
The same thing is playing out in some of the infrastructure names as well. We highlighted Dilip Buildcon a bit earlier. J Kumar Infra has got gains of about 10.5–11%. Infra financiers, the likes of Shrey Infra 2, are having a good move. GVK Power is up about 9.5%. So it's good, strong show out there too. Any thoughts here, Dharmesh, Kant?
Yeah, as I said earlier, today everything is seeing a traction, and I personally would not be recommending any of the infra stocks as of now. Because my own sense is next 6 months will be difficult for these companies to catch up on order book and execution as well. Because if you look at the infra space, the entire infra space was boosted by government expenditure. So we are already running at a very high fiscal deficit kind of a scenario, and whichever government comes after the elections, I don't think they would be in a position to expand the this deficit further, because the first and foremost job would be to curtail the deficit and increase the revenues. Revenues are not increasing to that pace because the GST collection which was there for the month of Feb was at 97,000 odd crores, so no traction out there. So keeping everything in perspective, I think this is more to do with our trading bonds, which all the other names are seeing. So I would stay away from infra stocks as of now. Case in point is L&T. Look at Larsen & Toubro. It's not participating. The best infra player in the market today, it is down in this market, and the others like NCC and the names which you took are up. So it's just a trading bonds. So to my mind, it's an avoid as of now.
Okay, avoid these names for the time being is what Dharmesh is saying. There is a dead cat bounce. I reckon that's what his view is. Now, while we're talking about all the gainers, what's losing out today is IT. A small pullback after fairly decent moves that we've seen in this space in the last few days. Avinash, Gorakshakar, come in here, large cap IT taking a bit of a pause. Could this pause extend itself and result in some losses, or you believe they'll meander around these levels?
No, I think on a stock-specific basis, I think there would be some interest, especially in stocks like Tech Mahindra, Neeraj. I think clearly the company has posted a very stellar set of Q3 numbers. The management commentary was also solid. And I think the management is now hopeful with the 5G kind of rollout. I think a lot of incremental demand is expected to come through. So I would believe that, apart from the fact that they've announced a fairly attractive buyback price of 950, Tech Mahindra definitely could be a stock to look at and could be accumulated at the current odd levels. I would not be surprised that given the fact that, the core business continues to grow, you could see stronger set of numbers not only for Q4 but even for FY20.
Oh, strong show by and large by IT, but in today's session a bit of a pause for these names. On the large caps, in the last 3 or 4 days we've got multiple calls on ITC. That stock is up about a couple of percentage points in the session today, trading near about the highest point of the day. How does it look on the charts to you, Sacchitanand? Can somebody make a fresh purchase here?
We are talking about ITC, right?
Yeah, we're talking about ITC.
Yes, in fact, ITC, we have been observing that the stock has been, within a particular range of around 277 on the lower side, and if you look at the higher bound, it has been facing resistance somewhere close to 288. I think the rebound is very well. In fact, from a trading perspective, we may see this particular momentum getting continued right up to 288. A stop loss could be placed now at around 279, and longs can be still added.
Okay. What about you, Amar? ITC?
Yeah, I would say that ITC, if you look at the long-term charts, clearly it's trendless. It's not going anywhere. Short-term, immediate, I would say 285 levels. If that is taken out, yes, then the stock has a potential to rally towards 295, 296 levels. And ideally, in that case, the stop loss needs to be below 276 levels.
FMCG is taking a bit of a pause today. Colgate-Palmolive too marginally off in the session. Again, Dharmesh, would it be a factor of high beta gaining momentum and therefore defensives taking a back seat? And would you use a day like this or the next few days, if indeed there is some more correction or a pullback, to accumulate any of these names? And if so, which ones?
I think Neeraj, you nailed it. This is more of the shift is towards the high beta name rather than the defensive plays. Anyways, FMCG were trading at the upper end of their valuation multiple, and it was just that some of the jitteriness in the market which was keeping them up. My own sense is going forward for next couple of months, it would be a shift of trade from defensives to more of a cyclical and aggressive plays. So HULs, ITCs of the world won't find more buying traction. And as things become more clearer, the first factor is the trade war between US and China is almost going to be settled. And second is people are hoping that the ruling party may come back into the power when the Lok Sabha elections happen. So these two triggers would push the market forward, and there you will gain more on the aggressive front like BFSI, automobiles, auto ancillary, metals, materials and all. So rather to, if you are holding these from a investment perspective, stay invested, nothing wrong with these companies. But if it was a trading bet, time to book profit and convert into more into cyclical plays.
Okay, time now to focus on what dealing rooms are recommending in the session today. Yatin and Darshan are here with their channel checks. Good afternoon, both of you. Yatin, let's start with you first.
Neeraj, Kotak Mahindra Bank is one stock we need to watch out for. It has been in a tight range after the recent block deals. We have seen some correction there. But at lower levels, dealers do indicate that select HNIs are creating positions on the long side as far as Kotak Bank is concerned. 1.5% up for that one. Dealers expect the further momentum to continue. Aurobindo Pharma, dealers are indicating that at higher levels, a lot of short selling is seen in the counter. There is a good change in the open interest. Dealers do believe that probably from here on, select pharma stocks could see correction like IT stocks. So Aurobindo is one stock wherein dealers are initiating some short positions. And finally, in terms of BTST strategy, which is buy today, sell tomorrow, Jet Airways features on the list. Dealers do expect the trend, on the positive side to continue for stocks like Jet Airways. But Darshan has a few more stocks.
Yeah, so I think today a lot of mid-cap banks are doing well. Take a look at counters like Lakshmi Vilas Bank, which has moved up almost 9%. Karur Vysya Bank has managed to move up. And quite a few of these smaller private sector banks, even Karnataka Bank, have managed to move in. So a basket buying by HNIs and some of these smaller private sector banks is something that we heard from dealing room. So that's something being spoken about. Sticking with bank, IndusInd Bank has seen decent volumes today, managed to move up on decent FNO trends also. Dealers indicate a large FI fund is actively accumulating IndusInd Bank at lower levels. So that's something that you need to watch out for. And Sri Pushkar is up almost 12% in trade. There is a buzz of a potential corporate announcement that could come in. It's moved higher on very high volumes today. So that's something that's been watched out for today.
Right. Darshan, thanks very much for that. So those are some stocks that you need to keep an eye out on. And since we're on the topic of Jet Airways, Avinash, come in on this one. You've got almost 1/4 of its fleet grounded now. Yeah. Meanwhile, obviously, we're going to be waiting and seeing what happens with the resolution plan. But ahead of that, would you be preemptive to take a trade on the stock?
No, I think in the short term, definitely the stock has the potential to actually give a reasonably good upside, considering the fact that one thing is very clear. Naresh Goyal has indicated that he would be stepping down, and obviously, fund infusion is definitely going to be the key element. Once this is announced, Devina, you could see a short term at least rally in the stock, considering that this has been one of the main reasons, the company has been suffering. Fundamentally, I think at least for the next 1 to 2 quarters, it would take a lot of time before we could see better operational numbers coming in. So technically from a short-term point of view, there could be a bounce, but from a long-term point of view, it's better to wait. I think it would be wise enough to wait for the resolution plan to come out and then take an entry.
Okay. Jet Airways, maybe temporary, actually difficult to call this one, so let's avoid doing that. Stocks which have moved up again in the last few minutes. I think Crest Ventures has inched up in the last 5 or 10 odd minutes of trade, so do watch out for that one, a sharp uptick for that stock. So small cap stock, but doing well for itself. There is a big move in Repco Home Finance, 24% higher, 11.5% for Repco Home Finance. That's a sharp surge that's happening here. What's happening here, Avinash?
I think Dheeraj, here the stock was beaten down beyond expectations on the downside. So I think this seems to be a smart pullback. As of now, I would believe most of the housing finance companies, probably another quarter or two, there could be some challenging headwinds where we could see a little bit of margins and yields coming under pressure. This 24% rise possibly does not augur well, at least in the near term, because considering the fact that the management commentary post the Q3 numbers was quite cautious. So I would believe it's better to wait and watch, Neeraj, rather than quickly jumping the gun and buying the stock. These kinds of movements possibly could attract a little more profit booking in the coming week.
And guess what? Sorry, just wanted to come in. Maybe you can dwell more upon this. Dilip Buildcon is now up 17%, 522. It's up 75 rupees in a single trading session.
I think these companies, if you recollect, they were under the highs of most of the credit rating agencies. In fact, I would believe that although the order book has been extremely good, the order ramp up has been good, these companies have actually been working capital dilutive companies, and these kind of moves in one day, I think, does not change the fundamental aspects of this business. So clearly, I think if one were to even take a call on these companies, I wouldn't buy these companies in a hurry. So it's better to wait and watch. These kind of movements largely don't remain to be stable. So I think better to bet on these companies maybe at a lower level, but not at the current price.
Okay. Since we're talking about Repco, I think all the other housing finance companies too are active in trade. Indiabulls Housing, for that matter, is now the top performing counter on the index. It's up 10%. 739 for Indiabulls Housing Finance. Should pull up a Divan Housing Finance, Canfin Homes, PNB Housing Finance. Divan Housing not so much, just about 4% higher. PNB also not so much, just about 1% or so. But Canfin Homes, a decent move on that one. But stealing the show, obviously, is a Repco Home Finance. Jindal Stainless today moves up, 41 rupees on the stock, 15% higher. Amar, what would you do with a Jindal Stainless if you track it, and a Dilip Buildcon too?
Yeah, looking at Jindal Stainless, if we look at this particular stock, it was consolidating, and from almost 23 odd levels, currently it's around 41 odd levels. So it was extremely in the oversold territory. There was this possibility of a bounce back. But I would say on the upside, it has got resistance, immediate resistance around 43, 44 current levels. So one can witness profit booking around those levels. If that level is taken out, then the stock can head higher towards 48, 50 levels. And talking about the other stock which you mentioned, Dilip Buildcon. So if we look at this particular stock, I would say it has rallied significantly and today. And on the daily charts also, it is looking positive. On the weekly charts also, I would say it remains positive, but it has got some resistance around 525 odd levels, 525, 530. So ideally, not a good level to enter at these levels because the stock has been up significantly today. So I would say rather one should look at booking profits anywhere around 530, 540 levels.
Okay, let's get in closing strategies from our experts. Amar, to you first. Your top closing strategy.
I would say one can look at IndusInd Bank. Because if you look at IndusInd Bank, what we are seeing in IndusInd Bank is that this stock has been in consolidation. And if you look at the long-term charts, the stock has corrected significantly from almost 2000 levels, currently around 1540. On the weekly and the daily charts, the stock continues to remain positive. So this is one stock, any dip towards 1530 levels. Currently, it's around 1540, 41 levels. So any dip towards 1530 can be used as a buying opportunity with a stop loss of 1493 and a target of 1595 on the upside.
Okay. What about you, Sacchitanand? Your top closing strategy?
Well, the focus remains on banking itself. In fact, Axis Bank is something that we have been continually talking about. The first target for this particular counter has been achieved, and I think there is still a good amount of headroom which is still left up to 753 now. Stop loss can be placed somewhere close to 727, and longs can be added in Axis Bank for a target of around 753.
Well, up and about 732 and counting. Avinash, one final word from you. The corporate-facing banks, or both private and PSUs, whole conversation of lower credit costs, lower provisioning, lower NPAs, and therefore an outsized jump in profitability in P&L over the course of the next 12 months. Your numbers suggest, what do your numbers suggest? Which of the ones would be the best gainers?
I think the corporate facing banks would definitely have an edge on the retail focused banks, and I think for a long time the corporate book has not grown. I would believe stocks like Axis Bank and ICICI Bank, even to a large extent Kotak Bank, I think these banks could definitely show a decent rise in their corporate loan advances, and I think the margins also could improve. So I think clearly what we are seeing within the private bank space, especially the corporate lending banks, we could see this rally continuing, considering the fact that most of the bad assets have been written off, and hopefully FY20 Neeraj would be a much better year for corporate lending banks.
Okay, Avinash, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us that perspective. Dharmesh, today the Chinese growth numbers may have led to a bit of a fall in crude prices, but what could be the larger impact or the larger reason why OMCs have had such a sharp surge? It's not that OPEC is not going to cut production, and as a result of which, the bottom to the oil prices might still be not too far away.
Yeah, right. I think OMCs is just a trading bounce, which we are seeing, nothing to do with minor drop in the oil prices. To my mind, I think oil prices are going to go up further here. I mean, 5 to 10% kind of an appreciation I see in the oil prices in next coming 1 to 2 months. And if this trade war between China and US settles, that will be again a propeller to the oil prices, because the growth is going to pick up faster than what has been expected. So the world economy may be again on the verge of a revival from the U-turn may happen out there, and that's good news for oil producing countries. So having said that, refiners, was always a trading bet. You can never bet on it, because once the oil prices go up, government steps in, and then all the problems starts out there. So enjoy as long as the rally goes with your trading stop losses in place, and from investment perspective, none of the refiners are there on my buy list.
Okay, we'll leave it at that. Dharmesh, thanks so much for taking the time out and giving us that perspective. Appreciate your time.
Thank you so much.
As we wrap up trade, maybe a call on some of the top movers in the session today. Between Tata Motors and Eicher Motors, Sacchitanand, would you initiate / carry home one of the long positions?
Well, both the stocks are difficult. In fact, what we are eyeing on is Maruti, where there is renewed momentum. Probably your stop loss can be placed somewhere close to 7055, and longs can be carried forward in Maruti. We're expecting that the recent swing, which was established somewhere close to 7300, could be revisited. So I think Maruti is better as compared to Tata Motors or Eicher Motors from a fresh trading perspective.
Stay on, Jamin. We'll get into final thoughts from you on such a big day of trade for the bulls, at least. About 1% higher for the Nifty 50 and the Sensex. The Nifty Bank, which has led the rally today, about 500 points up on the green, so extremely strong showing. And the mid caps and the small caps, on a day like this, it's very difficult for them to not perform. Look at that, 4% uptick for the small cap space, the mid cap space about 2.3%. A really strong show that has come in by the broader end of the spectrum, not just today, over the last few days. I think the small cap index has gained northwards of 8%. in the last 5 or 6 trading sessions alone. Devin, I'll speak more about that. Let me talk about the large caps and the gainers thereof. Actually, there are losers as well and fairly large losses on some of those, but look at the gainers. Indiabulls 10%, iShares 8%, Tata Motors 7%, OMCs, Hero MotoCorp essentially bounced back, boys, save for Axis, which anyways had a good run until now. Everything else are stocks which were beaten down and are starting to move up. So very strong show today. Let's see if this continues tomorrow. What's not done well? Again, stocks which had done very well are pulling back. Wipro, TechM, Infosys, all cooling off. Z cooling off, TCS cooling off. HUL defensive. So essentially the defensive bent of the market in this session today under pressure. Yes Bank is just about cooling his heels, and HDFC. So two stable names which have had a bit of gain in the last few days, still cooling off. But otherwise, it's the stronger names which are having a bit of a cool off today. What about the broader end of the spectrum, Devina?
You just highlighted it, 2.5% on the mid-cap index, 3.5% on the small-cap index. What more could you ask for on a day like this? So all engines firing across the board. Starting off first with the gainers. In fact, I want to only highlight the gainers in today's session because there are no meaningful losers in today's trade. Big gains coming into counters like Suzlon, a smaller name. The stock is just 7 rupees, but 27.5% higher this afternoon, taking its 1 month run up to 100% for Suzlon. That's 7.5 odd rupees where the counter is currently trading at. Repco Home Finance is the other one that has really shot through the roof in today's session, 22.5 odd by close for Repco. BGR Energy, that's the other one that's looking strong, about 19% higher, locked up on upper circuit. We spoke about Dilip Buildcon. The management commentary in a conference call seemed extremely optimistic, even on the guidance front, and the stock's up 20% in today's session. Jindal Stainless, you have the pocket of brokerages and allied NBFCs like Needlewise, Religare, IIFL Holdings. All these counters are up and active in today's session. So 13% for Religare, Edelweiss up 10% plus. IIFL2 is looking optimistic in today's session by about 6.5%. Equitas, so Jeevan Financial, again the NBFC pocket gains traction. Sterlite Tech, which is the stock which has gained a lot of momentum in the recent past, continues to glide up in today's session too. Manpasand Beverages, and the last one being J. Kumar Infra. So it is the bigger buzz that you're seeing across the board on the broader market side, the mid caps and the small caps in today's move that's being led by them.
Well, just pull up the market breadth, I guess. To start off with, would be interesting to see the volumes as well. The breadth should be positive. This is quite remarkable.
Through the day.
Yeah, pertinent point. Through the day as well. We started off well, we've ended well, and not once a sign of this breadth contracting in any fashion whatsoever, which is quite remarkable today.
Yeah, and the turnover figures are an important watch in today's session. Almost 38,000 odd crores. So you're going to see possibly a reflection of that in the FII numbers and the DII numbers tomorrow morning, because that's a lot of cash buying that you're seeing in today's session. F&O slightly more subdued in terms of it being the start of the new series.
Yeah, and contributors, you will see IT on one side and banks on the other. And yeah, that's how it shaped up. In fact, it's all IT on the losing side, but hardly any dent to the index. Very strong move today.
All right, that's how the markets are shaped up today. Really strong market, and expecting a follow-through in tomorrow's session. Amar?
See, the way Nifty has managed to close above almost, it's very close to striking distance of 11,000 levels, and also it's been a very strong day for Nifty, and closing close to its highs of the day clearly shows that there is bullish momentum on the upside. And once the index takes out 11,000 levels, 11,010 levels on the upside, then we could see the index rallying towards the 11,100 levels. So yes, one should wait for tomorrow's open as well.
Sacchitanand, what about you?
Well, absolutely yes. In fact, we have been expecting this particular move, and if you look at the last 3 expiries, whenever the fresh expiry was starting, we saw a lot of congestion around 11,000 mark, 11,100 mark. From the call writer's perspective, this time we have really not seen that congestion, and that's why we believe that there's a very good chance that 11,100 level, which we have seen recently, could be surpassed in this particular move itself. So we are optimistic on the market. In fact, the base seems to be shifted from the levels of around 10,580 to 10,700 now. So I think the overall trend has been elevated, and probably we may see levels close to around 11,260 very soon.
Right. Okay, we leave it at that, gentlemen. Thank you so very much for joining us this afternoon. Amar Singh as well as Sacchitanand Uttekar. Well, with that, it's a wrap on this edition of Countdown. From Neeraj, myself and the entire team that's put this show together. Thanks so much for watching. We've got the market wrap coming up next.